Good morning, guys. Welcome to TalentBlazer, India's latest EdTech platform that is there to help you at every stage of your career. And now I am your teacher and mentor in this journey, and I am covering UGC NET Paper 2 Commerce. The subject code for the same is 08. And in today's class, I will be starting Unit 2 of your syllabus titled Accounting and Auditing. So we will be starting with basic concepts, and from this you can expect few questions because there are 10 units, and certainly sometimes there are weightage is different. Sometimes you will get more questions from a specific unit, and sometimes it differs, right, from year to year, or you can say like because in the last 2 years it has happened only once in a year, but usually in this year we are hoping that the UGC NET examination happens twice a year. So we'll start with Unit 2 Accounting and Auditing. We'll first focus upon accounting. What is accounting? So accounting is language of the business, as I expect many of you, those who are watching this videos, right? Because I have already covered so many units, and if you are new to the channel, do leave us up and do watch the previous videos as well. I have covered various units, and definitely that will help you in your preparation. And as everyone knows, your exams are nearby, so you need quick revision. So those videos will help you for quick revision. Now let's start with Unit 2. So accounting is the language of business. I expect everyone who is watching having this much knowledge. Coming from the commerce background, they must have studied accounting in their 11th standard, from the 11th standard to BCom and MCom as well, or MB depending. So accounting is the language of the business. It helps the business not only in finding out profit and loss for a period and its financial position on a particular date, but it also helps in management of business. Because how it happens, as you will get to know that our company is performing this much, we are getting this profit, or we are making this many losses in this time, and afterwards when you get to know, okay, this is the reason, and this is the issue why we are making so much losses, or this is why we are making so many profits. So you get to know that, okay, how we should proceed further. So that helps you to know whether where to move it, in which direction to move it. So accounting provides you that direction as well, and it also helps you to find profit and loss for a period. It has its own well designed and established principles. So there are different principles for accounting as well. We'll cover them. So they have their own design and established principles, which are guided by some concept and conventions, because every principle are being guided by some concept and convention. So that goes same for the accounting as well. So accounting, what is accounting? In layman terms, it is recording of transaction in a systematic manner in various types of book and their posting to a master book called ledger. So basically, there is a master book where you post all the transaction. Firstly, you have those transactions in the journal book, and then you finally post them to a master book called ledger. So accounting is a recording of transaction in a systematic manner. You are not recording transaction in a vague manner. And if you do like before accounting, if you, because businesses are have their own history, even before accounting started, their businesses used to run before that. But what used to happen, why accounting came in place, it was very difficult to manage all those transactions because there was no systematic entry, and that is why accounting came in and helped and guided ahead on how to proceed further. And that is why it is useful, it was useful, and it will always be useful. So that is for accounting is the language of business. Second, we need to know that history of accounting, and from here you can easily get a question. So there was no recognized accounting system before 15th century. In 1494, Luca Pacioli, right? So he is also called as father of accounting and bookkeeping. The book in which he mentioned and he talked about accounting and accounting principle isn't that much important to you because that is Italian, and specifically it is difficult for us to remember, and you won't be getting a question in which book he actually talked about accounting and accounting principles, but you can definitely get who is the father of accounting. That's a basic question, and you can expect that question in your examination, be it your UGC NET JRF, be it in-com entrances or anywhere, because this is very basic question. And I think because we what usually happens when we prepare for exams, we are in a hurry and we skip on the part of the we skip the part where basic questions are there, and that is why we lose out easy marks on such questions. So in 1494, Luca Pacioli, he is the father of accounting and bookkeeping. So the definition of accounting, which I think all of us must have read somewhere in our whole history of studying accounting. So accounting is the art of recording, classifying, and summarizing in a significant manner. So what you do, you firstly record the transactions, and then you classify it, and then you summarize it in a significant manner and in terms of money, transaction, and events which are in part at least of a financial character. So they, you have to remember this, that while making any transaction in your accounting books, there has to be something money related. There should be some money movement, corresponding to that transaction. So, and interpreting the result therefore. So that's how the hierarchy moves. First, you have to record the transaction, then you have to classify that, and then you have to finally summarize those transactions. So this is the definition of accounting given by American Institute of Certified Public Accountant AICPA in 1961. So this was given quite few years ago, like quite few decades ago. So this is definition of accounting: art of recording, classifying, and summarizing. This is the definition, right? And the history, as I said, this is the most important part on this slide. You have to remember that in 1494, Luca Pacioli gave the definition, or he recognized an accounting system. He talked about this, and he is called as father of accounting and bookkeeping. Now, the another very famous term in accounting is double entry bookkeeping system. So what is it, and why should we know about it? So what usually happens, because I have been coming across a lot of students when I do teach them in universities or in schools even. So what happens is that many of the students actually mug up all the accounting system rules. They don't go after what is the reason behind it, what is the logic behind this. So certainly they are clueless when I do ask them what is double entry bookkeeping system. So they are responding in different, they are giving different answers, and certainly not much of the response makes sense. So we'll talk about double entry bookkeeping system. I know most of you must be thinking that this is very basic, but yeah, you have to make sure that you don't miss out on easy questions at all. So recording of the transaction of business is based on double entry bookkeeping system. So if we are recording the transaction of a business, we have to make sure it is based upon double entry bookkeeping system. It is the most scientific, complete, and perfect system of keeping records. So it is most scientific, perfect, and complete system of keeping records. What usually happens under this system very has every business transaction has twofold aspect, right? So if a business is going into a transaction, if a business is going to buy something, let's suppose they are going to buy capital asset. So if they have to buy a capital asset, they have to you know uh, give the cash or transact the money to the one from where they are buying those goods, right? So there will be a two flow. The cash is going out and the machinery is coming to them. So under the system, a business has twofold aspect, debit and credit, and both the aspect are recorded in the books of accounts. So both the aspect will be recorded in the book of accounts. So if we go by the accounting equation, that increase in asset will basically means debit, and decrease in asset credit, right? So under this system, every business transaction has twofold aspect, debit and credit, and both the aspects are recorded in the books of account. According to this system, every business transaction involves two accounts, one receiving the benefit and other giving the benefit. So in my example, when I was talking about a business going to buy a capital asset, so they are going to buy a capital asset, and in that, so what they are doing basically, they are giving flowing out their cash or the money they have, right, to that business, to from where they are purchasing, and they are getting the asset or the machinery in return, right? So this is on based upon double entry bookkeeping system. So you have to make sure of this, that when cash is going out, you are getting the machinery, right? So uh, the transaction will be cash account debit to sales or to machinery, depending upon to, right. So they are getting increase in asset, increase in machinery, and the asset is decreasing of that particular business because there is a flow out of cash as well, right. So that is double entry bookkeeping system, and there is two-way transaction related to it because there will be entry in cash account and there will be entry in machinery account or the sales account. So this is double entry bookkeeping system. So what are assets now? Because many of the, many times many people are confused upon what is asset. So asset are the economic resource owned by the business with the purpose of using it for generating future profits. Now, as I talked about the machinery example, so machinery is a huge capital investment. You are investing in a machinery depending upon which business you are running. So let's suppose you are running a a manufacturing business, so you need a machine, and your machinery would be costing a huge money, right? And you have spent a huge money on buying that machinery. So now what happens? You get the machinery, and that is your asset. So asset are the economic resources owned by the business with the purpose of using it to generate future profit. Now, what's the purpose in the example that I actually explained you? So now the business will get the machinery, and with the help of machinery they will make manufacture products, and they will sell out those products, and they will generate profits depending upon how the business turn out to be. But that's a basic thing, that you get the machinery, you manufacture products, and you finally generate future profits. So those are for future profits. Those profits won't actually just come the day you bought the machinery. You have to make sure you get the labors, you get the work done, and finally you sell it for a price. You negotiate with the price, and you get your buyers as well, because you are going to sell the product. You need the buyers. So it all depends. So it means the property or legal right owned by the business. So it is owned by the business. The property, like in our example, the machinery is the property of business, and the legal right are owned by the business. So anything related to that machinery is totally, uh, you know, with in within the capacity of the business. And items only become asset of the business when business have its ownership right. So you're owning that particular thing, that becomes your asset, and enable the organization to get cash or a benefit in the future, right. So you will get a cash or benefit in the future because that's how it is. You are owning that machinery. In future you will manufacture products, and then you will sell them out, those products, and finally you will make out the money. There is depreciation to asset. I think most of us know about the depreciation of asset, because asset won't forever last long. Nothing lasts forever, right. So even machinery will depreciate. You need repairs and so many things, but that is not related to our topic today. So that is all about depreciation and other things, but we are not discussing that today, right. So used in its production or service process, give the benefits to the organization. So we are talking about asset are the economic resources owned by the business with the purpose of using it for generating future profits. According to Finney and Miller, asset are future economic benefits, the rights which are owned and controlled by the organization or an individual. Even I can set up a business, or there could be a members coming together, and then we are setting up a business, and then we are an organization. So that asset belongs to the whole organization and not to me there in that case, because I'm not the only one who's the owner of the organization. So that asset belongs to the whole organization, right. So asset are the economic resources. You have to remember that definition not only stops with the ownership, right, and it also helps you to get cash or benefit in the future. So you have to remember the complete definition, not in isolation, that okay, if I have the ownership right, I have the asset. You have to remember that you can get cash benefit or cash or any benefit in future. So that is how asset is relatable. Asset is defined.